back. Make sure your cameras are on, please. Cameras, turn it on. All right, any questions before we start? Nina? All right, since there's no questions, we're going to go straight to this chapter. Now we're going to repeat, again, a lot of stuff that we've gone over before. Is just some stuff is state specific. The majority of it is, again, repetition. Now, broker-salesperson relationship. Before you start in this business, you need to know, again, as it says, your relationship with your broker. What does that mean? It means we need to have something in writing that tells us who we are in the business, right? Why is this important? Because your employment status will change how you do your taxes, right? If you're an employee is one thing, if you're independent is another, right? So therefore, your employment agreement should explain all this stuff to you. Now, a salesperson must be employed by a licensed broker. We already know this. The law does not allow a licensed salesperson to make contracts or receive compensation from anyone other than the supervising broker. We got this from the previous chapter. We got this from like 4 chapters ago. Right, so you know this. The salesperson may be employed as either an employee or independent contractor. If you are an employee, right, if you're an employee, then a salesperson can be required to follow office regulations such as working hours, dress code, attendance at office meetings, etc. Will have income tax and Social Security withheld from his or her compensation. Will have unemployment and workers' comp tax paid on his or her salary. It may have employee benefits such as health insurance, paid vacation time, paid sick time, etc., and will be supervised and controlled by the broker. Now, it's not the normal situation for you to be hired as an employee. It's not normal. The most common one is being independent. But if you are an employee, right, you're not paid per deal, you're paid a salary. Therefore, the broker is responsible to withhold taxes and insurance out of your paycheck. Okay, very important. The broker can make certain requirements, like you have to be here from 9 to 1 or 9 to 5 or whatever the requirement might be. If you're an independent contractor, I cannot require you any hours. You're independent means you're your own boss. What does that mean ultimately? Is that you make your own decisions of whether you want to work a little bit or you want to work a lot, where you want it to be just a little committed or fully committed. That's totally up to you. We as an agency cannot control the amount of hours that you must work in order to make this a successful business, right? So it's not us, it's you. You're going to use whatever you want. You're going to wear whatever you want, right? Now comes the part of reasoning, right? Of what you should wear as a professional, right? As long as you meet office standards when you come in, like I don't want you here in pajamas, as an example, right? Unless it's one of those Fridays. But anyway, so listen, and this is a true story. This happened about 4, maybe 5 years ago. A student of mine, I did mention, hey, you don't have to, right? There's no particular code that you must abide by because you are your own boss, right? And one day, this student became a salesperson and decided to work at the agency that we were working with at the time. So this student shows up to do what's called floor duty. And floor duty is you sit there and you take the phone calls, and any call that comes through is yours, right? Any lead is yours. And usually we don't have walk-ins. Like the real estate business nowadays doesn't have walk-ins. So we could be on a 180th floor, like nobody cares. The walk-ins is not that common anymore, right? Before we needed a storefront, hey, we're here. But that particular day that this person decided to do floor duty, we had a few walk-ins. And she was in pajamas. Yeah. So how professional do you think this business now is when you walk in on somebody with pajamas trying to help you buy or sell a home, right? So it's either I'm that good that I don't even need to put clothes on, or the whole business is that bad, unprofessional, right? So after that day, that particular office, wrote out a memo and sent to everybody. You're not required to follow any office dress codes, but if you do come into the office and work at the office, we require that you be at least presentable for your own business. So again, we cannot force you, but I'm telling you, for your own business and for your own good, be presentable, right? So that was very important. Another thing is we cannot require office meetings. There's no mandatory meetings. There's no mandatory trainings. But it is advisable, guys, even though you are independent. I slow down here a lot because this is key. Even though you're independent, even though you're on your boss, you think you can do things on your own? No. You will need guidance. And for that, I recommend that you attend as many office meetings as you can, as many trainings as you can, right? Oh, but Bruno, I already did contracts last week. Do it again. Right? Do it again. I mean, I'm proving to you guys right now, as many times as I ask questions and I go like, hey, remember a week ago we said this, right? I'm proving it to you that we don't learn everything in the one sitting. So do you have to repeat the training for you to catch everything, for you to be like, oh, yeah, that's exactly what I needed, right? And then you show up a week later, let's say it's the same training. Let's say you go to contract trainings 4 times. I guarantee you that every single time you're going to catch something new. Because I see it happening when somebody's preparing contracts for a client. Oh, Bruno, please. It could be their 10th contract. It could be their 20th contract. Bruno, please. How do I do this? How do I do that? Pedro, please. How do I do this? How do I do that? Like, the contract is the same. The contract is exactly the same for 1 to 4 family. It does not change here in New Jersey, right? But situations change. So in a contract training, as an example, like the school also provides a contract training. In a contract training, as an example, we will go over all the different aspects, or the most common aspects, or transaction, most common transactions, what to expect, how to change here, how to change there. If this is the case, then what do we do on page 5? What do we do on page 14? Right? Do you guys understand? So it's not just, it's the most boring training you'll ever have besides ethics. It's the most boring training you'll ever have because you're going through 14 pages of a contract, right? And you feel like, okay, again and again and again, sure. But it's something that you guys need to learn how to do. Because contracts, listings, right? This is going to be a constant in your life as a realtor. You guys understand? So if nothing else, this is a training that you are required, not mandatory, but required, meaning experience requirement, to do as many times as you can. Okay? Let's see here. Working under a broker. Is it you who chooses to be a salesperson or independent contractor? No. 99.99999% of the times you will be a independent contractor. Okay? And there's no salesperson or independent contractor. There's salesperson, independent contractor. Okay? There's salesperson, employee. So it's either independent or employee. It's one or the other. Right? Now, can I be an employee and do sales? Right? I can, but I'm not going to get paid compensation per deal. I'm getting paid a salary. How many times will you find this situation? Not many. There's not many corporate realties, right? Meaning corporate structure realties where somebody operates, has a license and operates as an employee. Not many. But I'll give you an example. Let's say I need somebody here to man the phones. Instead of me asking you guys out of your own free will to be here and do floor duty, right? I'll hire one of you to be here from 9 to 1, and then somebody to be here from 1 to 5, and so on, right? So during the period of time that you're here from 9 to 1, that's your employment status. After that, can you go do your own deals? Sure. After that, you're free to go anywhere you want and get paid per closing. But the 9 to 1, is salary based. So it doesn't matter how many deals come in, right? How many we close, you get paid a salary, not compensation per deal. And you get a bonus maybe. Because you're licensed, we can pay you whatever way we want. Does that make sense? Right? So you're either one or the other. You'll never wear both hats at the same time. So while on the 9 to 1 or 9 to 5, whatever it is that you agree with your broker, if they have that need, while in that status, you are being paid a salary. You're X amount of dollars an hour and potential bonuses later on. If you're independent, you're out on the streets and you're finding your own deals, right? And you're closing your own transactions, then you get paid performance-wise. Nina, if you're an independent contractor, do you need to go to the office? Technically, no. In fact, if you're at the office, I keep on saying this, if you're at the office, you're not making money because you need to bring deals. The deals need to happen, right? But in the beginning, what do you know? Absolutely nothing, right? Because I'll guarantee you, by the time you guys pass this exam, right, as soon as you go to the state exam and you pass it, it's going to be a blank. You're even going to forget you were here on Zoom, right? You're going to just like complete blank. You forget the book, like laws, what? No, I don't know anything anymore, right? It's gone. It's like you're a baby again. So somebody needs to train you, right? And then comes the real training. That's the real hands-on training. You understand? So how are you going to do that if you don't come to the office, right? How are you going to get clients? Do you know how to get clients? Those are the perks of coming to the office. Like I have a couple agents here at the real estate agency that's what they do. They come to the office, and because of the consistency, they've been able to close way more deals than the ones that don't show up, right? And I assume that the ones that don't show up are always talking to people and trying to get deals going. But if you don't come here to learn, hey, Bruno, I have this situation. How do I talk to them? How do I do this? How do I prepare the contract? How do I prepare marketing? Right? If you don't come here and do those things, it becomes a little bit more difficult. And don't get me wrong, there's a lot of training online. A lot of agencies have online training that I believe strongly in online training, but mixed with one-on-one or group trainings at least, right? Not solely online. We're still not in that 100% virtual world as some agencies out there like to talk about. I still believe there has to be some type of face-to-face leadership, right? Some type of accountability that way, right? So that's me. I mean, everybody can have different opinions, but some agencies still believe nothing online, everything in person. Some agencies believe everything online, nothing in person. But we also have a mix of clients. Some clients are okay with doing everything online. Some clients are need to know that you have an office presence somewhere. So you need to know what type of clients you're going to deal with. So again, can you do training online for the things that I was telling you before? How to prepare contracts, how to market, how to do this, how to do that? Yes, you can. How many of you, and you don't have to raise your hand, but how many of you actually go into the student portal and actually study or review everything that's there? That's the question they need to ask yourselves. What kind of person are you going to be? Am I okay with doing things online and learning online? Or do I need that grab by the hand and this is what we're going to do right now? You understand? So to answer your question, I know it's a long answer for a short question. Do you need to go to the office? No. You don't at all. You're independent. You are your own agent, your own boss. You just got to make sure you follow the broker's guidelines. That's it. Because if you don't, you could also get fired. Like we won't sponsor you anymore, as an example, right? Next, Felix. So the moment you're done with a 9 to 5 from the exam, what? Oh, the exam open. Got it. I got you. So the moment you're done with the 9 to 5 from the example, you don't need to yell at me. Okay, I understood. It's just exam open and example. You know, I had to translate. Give me a second. So the moment you're done with the 9 to 5 from the example you used, step out and close deals. At that point, you've gone from being an employee to becoming an independent contractor. Absolutely. That's it. See, at that moment, let's say 5 o'clock ends here, I no longer have control over you. I only have control from 9 to 5 because that's the hours I require you to be here if you're an employee. So after 5 o'clock, you go out there and start knocking on doors and say, hey, anybody wants to sell, anybody wants to buy, I'm an agent, right? If you go do that, all those deals are operated as independent. So you will get paid for any deals that close based on that effort. Okay? All right. The other thing is, the other side of this is, as I have here in green, is that you're going to be required to pay your own income tax and social security tax. So as an employee, you are W-2. As independent, you are 1099, right? Simple. These are the ways you do your taxes. As a W-2, you're going to get deductions for social security, for unemployment and all that stuff. And then you have what's called a net pay, right? For 1099s, that's it. You get a full check, so it's a gross pay. And then you do deductions. So you are responsible for your own taxes. We pay you a full check. Here's $10,000, right? And then you're responsible at the end of the year to make your own taxes, apply for your own deductions, whatever. If you're a W-2, government, Uncle Sam says, hey, Bruno, you know that employee you have? Make sure they pay us first, and then you can pay them. So they force us, the IRS forces us as an employer to deduct already from your paycheck and then pay you. You understand? So that's the biggest difference, W-2 versus 1099. You have deductions, and then you get your net pay. With a 1099, you get a gross pay. You're responsible for your own deductions. Okay? Felix has a question. Okay. At the end of the day, as far as employee and independent contractor paying taxes, they all end up the same because they still get to pay. No. So the cool thing about being independent, the really, really cool thing about being independent, that I can deduct everything, even uniform. As an employee, you might not be able to deduct anything. As independent, my travel time, see, we're not talking about just the social security, unemployment, all that stuff deductions. We're talking about deducting the cost of operation. Because you are your own boss, so that's your own business. So your cell phone could be deductible. Your travel time, so maintenance of the car, the miles, one or the other could be deducted, right? You're just responsible to know what you can and cannot use for as far as deductions. Your meals could be deducted. Your memberships, your legal costs could be deducted from the business. Depending on what type of vacation you had, could be a business meeting. So you just got to know how to classify it, if it was or if it wasn't, right? Like most of most of the vacations that I go to, as if you want to call vacations, I always go to a meeting somewhere regarding the business that I'm in. So that's we will classify it as a business expense. So I don't go on vacation for the pure joy of vacation. I go on business and happen to stay another day or two, as an example, right? So the purpose of the trip was business. Do brokerages teach what sales agents can deduct? Not all do. That's between you and your CPA, right? So the CPA will ask you, did you have this? Did you have that? And this is what you can deduct or not, right? What we're doing here, for instance, as an example, at the agency, we are bringing a CPA to come talk to our agents. So the plan is to bring them a couple times a year to talk to the agents on how to prepare themselves for taxes, how to keep records, how to like what tools to use. Like for instance, if you guys use QuickBooks Self-Employed, one of the things that it has, that app, is it tracks the mileage from one place to another, and you can classify it as business. So if you went to show a house, right, that trip was business. You can classify automatically business, and it was for this client. If you on the way you had to eat, or you had to put gas, whatever, you take a picture of the receipt and automatically goes into your QuickBooks Self-Employed, which you can share with your CPA, as an example. You understand? So the broker is not responsible to teach you about taxes. The broker is responsible to guide you in the real estate transaction. Okay? Again, you're your own boss. You got to stop. A lot of people look at the broker as your employer. No, you are your own boss. The only thing the broker is supposed to do is guide you in the real estate transaction. Everything else is on you. Will some brokers get out of their way and give a little bit extra help with everything else in the field? Maybe, right? But are they required to? No. Okay. In fact, some brokers, all they say is, look, tools are available, clients are out there, have fun. That's it. So they don't give you any training whatsoever. Some agencies are like that. Other agencies are a bunch of training, right? Like online training or whatever, but no support. So there has to be a balance between things. Okay. Felix, so as an independent contractor, after every deal you close, does the compensation still have to go through your broker? Every payment is to the broker, not to you. Your broker pays you. You never, ever, ever get paid from the transaction directly. Ever. Unless you are your own broker. Okay? So if the broker receives $10,000 and your split is 70-30, then you get $7,000. Right? And again, you're responsible to, at the end of the year, do your taxes and deductions and all that stuff. So with everything that we've been saying, and I'm going to move forward, but with everything that we've been saying, if you're a W-2, let's say your gross pay, as an example, your gross pay was $10,000 for this month. I'm going to assume this is W-2 and this is 1099, so this is you as independent, right? Here we're going to deduct Social Security, unemployment, disability, and blah, 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 blah. You walk away with 7,300, right, as an example, right? Here, and you have to do taxes on this number. Here, you're going to do taxes on this number. So let's assume they had to pay taxes on this number. Let's say 15% taxes on this number, right? You have to pay 15%, right? If you guys have a calculator, you can do the math. On this side, you can deduct for expenses. And the expenses could be, let's say, $4,000 were my expenses on it, right? So these are the deductions I'm talking about. $4,000 were my expenses. So how much do I walk out with? $6,000, right? So technically, I made less money than here. The difference is you're also taxed at a different rate. So the advantage is And by the way, I'm just giving you a broad example. I'm not saying that this is what it is. At the end of the day, it's what you're getting taxed on that matters, right? So you don't walk away with less money. You actually walk away with more money as on the same 10,000. You walk away with more money. It's just they allow you to deduct stuff, right? But let's say here you had to pay, as an example, let's say you had to pay $1,000 here to the IRS. Here you'd have to pay $200 to the IRS, as an example, because of all the deductions that you can claim for. So remember this: as a W-2, you still have to drive to work. Here you get to deduct that, right? As a W-2, you still have to have your clothes, your uniforms, and all that stuff. Here you might be able to deduct that, right? As a W-2, you might have courses that you need to learn, whatever. They might not be deductible or sponsored by your employer. Here, you get to deduct all your courses. Do you see what I'm trying to say? So we're not saying these are your real expenses for the business, but it would be the same expenses for a W-2. It's just that at the end of the day, here you pay $1,000 for that $7,300, while here you only pay $200 for the same money or more, right? So hope that helps. It's not direct numbers. I'm not the CPA. You can ask Elda over there. She can give you all these numbers, more or less, right? There you go. But I always pay way less as independent than I would pay as a W-2. All right? So back to this. Erase this. And that's the cool thing about having CPAs, by the way. You don't need to know the tax law. They do. You just got to make sure they're doing the right job. So, and by the way, if you guys look, and I'm not making this political at all, so don't come with that. But if you guys look with the whole scenario now about the taxes for Trump, the same way it was for taxes with Newt Gingrich before, and they were talked about Obama's taxes. And the reason why I'm bringing big names, right, is because they're recognizable for the point I'm about to make. If you guys were to put, let's say, $100,000 as your W-2 salary, and then $100,000 as independent, right? Let's say this is what Trump made, $100,000, and let's say this is what you made. He was able to walk away with paying $750, let's say, for the whole year. Yet, you would have to pay almost $30,000, as an example, because you're W-2. You don't have those deductions, like I was saying, the business losses, the business expenses, you don't have it. So that's pretty much what happens once you become a business, right? You're able to say, I had these expenses. And that falls also for property. If you guys remember when we talked about appraisals, right? In the income approach, right? We can deduct so many things, right? And at the end of the day, the post-tax expense cash flow was way bigger than if you were a homeowner, right? Because a homeowner is just expense, and you cannot deduct for maintenance. You cannot deduct for repairs. But investments, business, right? You fall into a different category. You can deduct a lot of things, right? So that's the advantage of being independent. Now, the disadvantage is what Felix asked before about being a landlord or not, right in the beginning, early in the morning, right? Even though he got here half an hour late, but okay. One of his questions was, isn't it better to just be a tenant instead of being a landlord? All right. As a tenant or as a homeowner, not investment, as a homeowner, you're not deducting almost anything. Like it's minimal what you can deduct. But as an investor, if it's not the property that you live in, or if it's not the units that you live in, you can deduct the repairs. You can deduct almost all the costs of operation. Right? Huge difference. Huge advantages to be a landlord or independent businesses. Anyway, moving forward. You will not receive, as independent, you don't receive employment benefits, as health insurance and so on. You can have only commission, not compensation. not employee compensation per hour. No controls over the employee, over the independent, I'm sorry. And you'll work under the IRS safe harbor guidelines to assure independent contract status will not be challenged. Now, before a salesperson or referral salesperson can begin working for a broker, the licensee and the broker must sign an employment agreement. Now, what is this employment or sponsorship agreement? Right? I'm contracting you. I'm the broker. I'm contracting you for services. That's why it's called an independent contractor agreement. Right? I'm contracting you for services. So I'm employing your services as a salesperson. Now, this employment agreement must include the compensation rate to be paid. So this employment agreement must state exactly how much you're going to get paid for every transaction. Oh, you're at a 70-30 split, that means you keep 70%. You're at an 80-20 split, that means you keep 80%. So we have to explain exactly how much you get paid for every transaction that you bring that actually closes. Also, when do I pay you? That's the second requirement that in New Jersey we have. It must clearly state when you're going to get paid. And it says you're going to get paid within 10 business days of receiving the commission. What does that mean? It means that we closed, technically we receive commission. So within 10 business days of that closing, you must get paid. Or as soon as the check cleared. What does that mean? Do you think the broker goes to the closing? The broker usually does not go to the closing. You do. So if you take too long to bring the check to your broker, then it will take long for that check to clear. So the requirement is, I'll pay you within 10 business days, but provided that you brought the check right away. If the check took too long to get to my hands, I have to wait for it to clear, so I'm not obligated to pay you right away. All right? The third requirement, I call this the prenup clause. All right? I call it. It's not going to be in the state exam. Hey, what's the prenup clause? No. I call it the prenup clause. Because what is a prenup, guys? A prenup, it's an agreement before the marriage, right? It's an agreement of how we're going to either split or join our assets, right? Prenup is the agreement, right? And then it also says, hey, if we get divorced, we already set up our divorce. That's what the prenup is. So it's pretty much saying, hey, I love you. I want to marry you, right? This is going to be forever. But just in case it's not, this is what we're going to do, right? That's what it is. It's a pre-divorce. That's what it is. So in real estate, it's the same thing. Look, you're going to come work for us. We love you. You love us. It's amazing. It's the best relationship ever, right? Until one of us gets fed up. That's the way it works. You leave because there's a better opportunity somewhere else. That's what you believe. Or we fire you because you're not doing things ethically. And we say, hey, you're not keeping the office high standards. So it could either be us terminating you or you leaving. What we're stipulating here in the prenup clause, right, is how much you're going to get paid after you leave. And you're like, well, how can I get paid after I leave? Well, because some transactions might be pending. So if you leave today, right, and there's 2 or 3 deals still pending to close, right? 2 or 3 deals still pending to close. Are you going to get paid 70%? No. Most likely they have an agreement here that you guys got to look at in every contract, right? Most people overlook the contract. It says your commission rate, instead of being the 70% as an example, your commission is going to be 25%. So all the transactions that close, pending transactions that close after you leave the office, your rate just dropped from 70 to 25 or to 10 or 0, right? But that clause must be in every single independent contractor agreement. So guys, make sure wherever you sign up, ask about this. All right? Because once you leave, you want to make sure you get your money. Usually that's what we call the trap. People don't leave because they don't want their commission to drop to 25%. They want the full pay. Next, also must include, like every contract, this is contract law, must include a provision that any future changes must be in writing and signed by both parties. So if I alter the contract, you must sign agreeing to those alterations. Simple. Compensation, we talked about this. All right. So we're on page, sorry guys, we're on page 415 of the second edition. If the broker has met all the terms of the contract or listing agreement and the transaction does not close, do we get paid? Let's say the transaction did not go through. Do we still get paid? Well, depending on what the principal did, you might still get paid. You may still be entitled to compensation. So let's look at this. The property owner or seller changes his or her mind about selling the property. Is that your fault? Is it my fault that the seller says, oh, I'm not selling anymore? No. The property owner commits fraud related to the transaction. Is it your fault that they commit a fraud? Hopefully not, right? The property owner does not comply with the terms of the listing agreement, right? Or pushes for terms not included in the listing agreement. The property title has defects that have not been corrected. So if you guys can tell based on all of these right here so far, if the principal caused the deal not to go through, you may still be entitled to commission. You might still be able to get some money out of this, okay? Most of the times I can tell you just keep going, right? Next, right? Most of the times it's just not worth it. But if it's valuable enough, yeah, the broker can bring action in court against the client. Absolutely. All right. Salesperson. The salesperson or broker salesperson must be licensed to receive compensation in the form of commission. You guys already know this. Under New Jersey law, we just went over this. The compensation must be paid within 10 days, 10 business days to the salesperson, right? And right here, if the affiliation with the broker terminates, let's say you're done, you leave, right? We loved each other so much, but it's time to go, right? You leave. Then the broker must provide, the broker must provide the licensee with a written accounting of all the monies that the licensee, that is due to the licensee at the time or in the future. So we have transactions pending. If they close, this is how much you can expect to receive. This must be given within 30 days of termination. It doesn't say I have to pay you within 30 days. It says I have to give you accounting of all the money that might be owed to you within 30 days. All right, to address Nina's question, the broker can sue for the commission, not the sales agent. Well, Nina, whose commission is it? Right? Whose commission is it? The broker's. Can you sue? No. Can you get paid after the broker gets paid? That's a different story. But who can sue for commission? Always the broker, because the deal is between the client and the broker. So if the seller walks away, the broker can sue the seller. If the buyer walks away, the broker can sue the buyer. Sales agents, we work under the supervision on behalf of the broker and get paid by the broker, period. Okay? All right, next page we have rebates. And I know I'm skipping some stuff we just talked about in the previous chapter. So, rebates. Next page, rebates. Since January of 2010, so this is a 2009 law that went into effect in 2010. A New Jersey law has allowed brokers to provide rebates to residential property buyers. The rebates must be paid from the commission that the broker receives for the transaction, meaning I cannot give you money before the closing, but I can give you credit at closing. Okay? So, the restrictions on the rebates are as follows. Only licensed brokers may provide a rebate. So only the broker may provide rebates. Only the broker. Remember this. Only buyers may receive rebates. Only buyers, never sellers. This is a New Jersey law. It's not in other states. New Jersey says we allow the broker to give credit to the buyer, never to the seller, to the buyer only. So make sure you take notes on this. The broker and buyer must contract in writing or electronic format for the terms of the rebate at the beginning of the brokerage relationship. So if I'm giving you credit, it must be stipulated up front in writing. Okay? So I must disclose the rebate also to all the parties in the transaction, including mortgage lender, as required by federal or state law. Now, can I give you a rebate or some type of credit at closing? We're not saying we cannot. We're just saying that if the intention is to give the rebate, we must give it in writing or put it in writing ASAP. It does happen a lot of times that we get to the closing and because of $500, because of $1,000, the transaction will not go through. Can the broker say at that time, hey, listen, just take it out of my commission, right? Just take, it's $500 and that's all we need, the buyer needs for us to close. Let's do this. So you're offering a rebate, it's like an emergency rebate at the time. Is it okay? Yeah, no problem. You understand? So it's an agreement right there. The rebate must be a credit that reduces the commission payable to the broker or a check paid by the closing agent at the closing. So the rebate is never money that you give directly, ever. And guys, very, very important. Never take money out of your pocket for somebody, ever. Because if the transaction does not go through, good luck trying to collect that money. And this is true stories. True stories where people go, agents go and, hey, don't worry about it. $250 is the CO application. I'm going to go there. I'll apply for you. And then you just pay me later or at closing. Don't worry about it. Right? I'm such a great agent that I'm going to do this for you. Don't worry about it. And then transaction does not go through and you're relying on their good faith. Right? And then you go knock on that door and say, hey, Mr. Seller, so yeah, transaction did not go through. Remember I put $250 for the CO. Could you please, like, how many times do you think you're going to get paid? You understand? So never, ever, ever put money out of your pocket to do something for them, right? We are responsible for guiding. We are responsible for consulting. We are responsible for making sure every player does what they're supposed to do. So the mortgage person, the title company, the attorneys, whatever. That's our responsibility. It's not our responsibility to fix anything, to apply, pay for permit. We can apply for them, but we cannot pay for the permits, right? Don't put money out of your pocket. But instead, if you really want to help the transaction go through, you can put credits at closing, which you have to talk to your broker before you do it, okay? Guys, make sure the cameras are on you, please. If the camera's not looking at you, we have a problem. All right? Next, a rebate must not be paid to an unlicensed person for performing any activity that requires a license. You guys already know that. And it must not be paid based on the use of services or products offered by the paying broker. It must also not be based on any lottery, contest, or game. Okay? Very important. Rebates cannot be part of a lottery, contest, or game. You're either offering it because you want to or raffling it, no good. Okay? Simple. All right, price fixing. So we talked about price fixing when we talk about antitrust laws. We talked about the Sherman Antitrust and the Clayton Act. So Price fixing and allocation of markets is where we're negotiating with competing offices, and we say, hey, listen, I'll do this, you do that, right? Or I have my commission is 6%, and now they make their commission 6%. That will be setting standards. That's illegal. So if we agree to charge the same commission rate or offer the same exact terms, that is illegal. That's price fixing. Here's a few examples. 2 or more brokerages agree to charge all the clients a set commission rate. 2 or more brokerages agree to pay a set referral fee. A broker tells a client that commission that he or she is charging also charged by all other brokerages because it's a standard rate. You guys already know by now that in New Jersey, commissions are, let me know in the chat. Commissions are what? What's the commission rate, standard commission rate in New Jersey? What is the standard commission rate in New Jersey? Let me know. Whatever you decide, it's negotiable between the client and the broker. Absolutely. So it's negotiable. Very good. Nina, is having a raffle lottery game at an open house illegal? If the condition is signing up for something, it's illegal. There's a condition to it, it's illegal. If you're offering for free or raffle or lottery because you want to and there's no limitations to it, right? Then no, it's not illegal. All right? So the key word for lottery is you'll get this if you join the lottery, right? No. Or for you to join the lottery, you need to sign up and buy the house or list a house, or if you put a condition as a for the service, then it becomes illegal. That's why usually it's preferable for you to avoid it altogether. Okay, so no lottery, no games, nothing. Offices and branches. I'm going to address these two at the same time. The thing about offices is that each office must be supervised by a broker or a broker salesperson, which can be designated as a managing broker, right? Now, one of the things you need to have is any resident broker must maintain a place of business. Must maintain a place of business. Any resident broker. But which broker are we talking about? By now, you guys should know that when we talk about broker, we're talking about broker of record. Broker of record. So every resident broker of record must maintain a place of business. So if you're not affiliated with another broker, meaning you're not a broker salesperson, then you must have a place of business. That's what we're saying, right? Olga's asking, what percentage is negotiable? Okay, the percentage is negotiable, but what is the usual number? So here's the thing. The percentage itself, like we said, is negotiable. The common commission that's charged, or the average commission, or I guess what became socially acceptable commission, is anywhere between 5 and 6%. If you charge 6%, most people don't even argue about it. If you charge 5%, people definitely don't argue about it. If you charge more than that, then there might be an issue. Well, people will have some. You're going to have some fight in there. But can we state that the standard is 6% or 5%? No. It became, like I said, socially acceptable. It's the number that nobody really argues, right? Or very few people argue about. But there's no standard at all. All right, next. The broker's name must be displayed on the exterior. The broker's name must be displayed on the exterior stating, hey, I'm Bruno Quintella and I'm the real estate broker for New Direction Realty, as an example, right? So it has to state the name of the broker on the exterior. Why? Because let's say, Fallon, let's say you bring a buyer and your buyer is Olga. Once you bring the buyer to the office, the buyer must know who to sue, who's responsible for your actions, Fallon, right? So Olga must know that she can sue me, right, in case you as an agent do something wrong. So Olga's going to sue you and me because I'm the one responsible for your actions. So the broker's name must be displayed on the exterior. Everybody must know who to sue in a real estate transaction. That's what we're saying. The next thing is, you guys remember I said the broker of record must have a place of business, but not the broker salesperson nor the salesperson, right? So understanding that opening up a business is a huge expense. What the real estate commission says, you can have an open home office. So broker, if you have room in your house, you can make your office right there. But there must have a separate space. So it has to be its own space, separate from the rest of the house, right? And it must have its own separate entrance, which is visible from the street, right? So can you have your office in your house? Yes. Can it be in the basement? If the town allows, and as long as the entrance is visible from the street. Can it be in the attic? If the town allows, and as long as the entrance is visible from the street. Can it be your first floor or second floor? Again, if the town allows, and the entrance is visible from the street, and everything is completely separate from your living space. These two are the same, which says again that each a broker or designated qualified broker salesperson must directly supervise the office. Branch office is the same thing, and during normal business hours, and they cannot be employed elsewhere. So this is almost guaranteed to be a question as well. You cannot be employed elsewhere. If you're the supervising broker, that's your job. So as a broker of record, can I have a job? No. As a broker salesperson managing an office, can I have a job? No. This is my job, right? Guaranteed, almost guaranteed to be a question. Nina, I assume you're asking a question because you disappeared, so I'll wait a few more seconds. There you go. Don't forget to always put the question mark so I know. Even though I'm always looking, I got you guys right behind my camera, I'm always looking at you. I don't always see that you disappeared. Okay? Don't forget that. I know it's the last week, but always remember that. So Nina, how can your entrance for the attic office be visible from the street? Right? Attic. Sorry. Attic, first floor, basement, first, second, as an example. How can the entrance be visible? So if there's a common entrance, right? Usually there's a separation that goes to the first floor, separation that goes to the second. So what has to be visible is that sometimes there's even through the stairs you can get to the attic, right? So it has to be visible is that here it says clearly that you have to keep on going to the third floor or attic or whatever. Just like for the basement, it could be the entrance could be in the same door right here, but then you go down. So remember, most houses, multifamily houses, they either have a shared walk-in entrance, right, and then go here for the first floor, go here for the second floor, or so on, or it's on the exterior. So for the attic on the exterior, yes, most likely you don't have that. There might be a staircase maybe, but most likely you don't have it. But if it's a shared entrance, right, so there's a little hallway as you walk in and then goes to whatever doors where the mailboxes are and all that, it just has to be clearly identified that the entrance for the office is separate from the other places. So visible from the street, meaning as you get there, Your entrance is to the attic. This is what you must follow. Period. Right? Just like commercial space is the same thing. All right. Question from Felix. Okay. Felix, using your home as an office, are you still required to have a sign that has your name as a broker? Absolutely. Doesn't matter where you're using it, you must have a sign in the exterior that says, I am the broker of record. If anything goes wrong, sue me. That's pretty much what it means. So, yep. All right, so trust accounts and record keeping. So you guys already know what a trust account is, right? Because we talked about this in previous chapter. So trust account is where you put money aside, other people's money, so we don't commingle. Remember commingling, right? So a broker in New Jersey is required to set up this separate bank account for trusts for funds that belong to others, which the broker has received in relation to the transaction, such as earnest money and deposits. The account must be clearly labeled, so I'm skipping right through here because we already know what it is. Must be clearly labeled in such a way as to protect the brokers from the broker's creditors or from heirs as well. You cannot commingle, which is mixing funds. You cannot commingle the funds. That's mixing them, right? So you have to deposit always in a separate account. Now, the real estate commission determines that commingling is you keeping the money for more than 5 business days. So if you keep the money for more than 5 business days, then that is commingling. 5 business days or more, that's commingling. That means you must deposit the money into the escrow account ASAP, right? Commingling. Now, what if I gave you the money, guys? What if I gave you the money, let's say today is Thursday, and I give you the money at the end of the day. When must you deposit the money by? I gave you the money, today is Thursday. I give you the money. When must you deposit the money by? I gave you the money at the end of the day. When must you deposit the money by? Let me know in the chat. Beyond 5 business days is commingling, right? When must you deposit the money by? I gave it to you on a Thursday. When must you deposit the money by? I don't. Tell me about it. What do you mean I don't? Bingo. Remember, if I don't give you a qualifier, then it's always your broker, right? So did I say that you were the broker? No. You guys are not brokers, you're salespeople. That's what you're going to be. So you got to look for the answer. And the answer is the broker has 5 business days to deposit by. When is that? Next Thursday. Yes, because it will be Friday, Monday, Tuesday, Wednesday, Thursday. 5 business days from receiving the money. So now what if let me give you another question. The same question, but the little twist to it. What if I gave you the money? You're the salesperson, obviously. I gave you the money on Thursday, right? But it was Thursday evening, and then Friday, you didn't feel like going to the office, and here comes the weekend, right? So what if you, the salesperson, brings the money to your broker on Monday? So your broker receives the money on Monday. When must the broker deposit by? When must the broker deposit? You received from me on Thursday evening. You did not show up at the office, right? Until Monday. Gave that money to the broker, your broker. When must that money be deposited? Very good. So nothing changed. Because here's the thing. When you receive money, your broker received money. Whether you gave to your broker or not, that's your fault. The broker has 5 business days from when the funds were received. Okay? It doesn't say when the funds were received by the broker, when the funds were received. Because you're an agent of the broker, whatever documents you receive, whatever monies you received, so did the broker. Period. All right? So take a note on this, because your notice to the principal is notice to the agent, notice to the agent, notice to the principal. So if you receive something, so did they. All right? So when must you deposit by? The next Thursday. Very, very important. Now, let's say instead of a check, all right, I gave you cash. All right, so let's see, Benjamin, I gave you $10,000 cash. $10,000 cash. All right? I will never give it to you on a Friday, because here comes the weekend, and even though Atlantic City is not that hot, it's still close by. Right? So let's say I gave you $10,000 cash towards this transaction. Right? And the transaction did not go through. It died. It was not approved. What should you do with the money? Right? What should you do with the $10,000 cash? You got to give it back to me, right? Because if I gave it to you, you got to give it back to me, right? It's logical. That part is logical. The question is, you're going to give me cash, or are you going to give me a check? I give you cash. You're going to give me cash, or you're going to give me a check? That's the question. Let me know in the chat. Are you going to give me cash or a check? No cash. Correct. I need to receive a check made out specifically to the person. Right? And some people are going to be like, but wait a minute, I gave you cash. What do you mean you give me a check? Right? Here's the thing. The trust account could be audited at any time. Let's start with that. So we need to show who the money went to. And if I withdraw cash, couldn't that be proof that I'm commingling? Right? Couldn't that be proof that I'm converting the money? So it's called conversion. That I'm using the money, right? But if I give you a check, you have to deposit that check, or you have to cash that check. Now there's your signature, there's your ID, everything attached. So yes, I gave you the money. You understand? So never to cash. The other thing is, because I said $10,000 or more, it could be $1,000, but because it's $10,000 or more, it must be reported to Uncle Sam, IRS, Internal Revenue System or Service. They must receive notification of this transaction. Okay, so anything above $10,000 must be notified to the IRS immediately. All right, permanent records. Guys, you got to keep, in New Jersey, we have to keep permanent records for at least 6 years. You got to keep records for at least 6 years. And this is true for anything that's a permanent record. So account activity, 6 years. Listings, 6 years. Contracts, 6 years. Anything that's permanent records, 6 years. You have to remember these. We're going to repeat it a couple times, but you have to remember. Are you guys good so far? Thumbs up? All right, great. So advertising. So obviously, we cannot advertise whatever we want. We cannot say whatever we want, right? Obviously, there has to be some type of regulation of what we do. With all these ethics, with all these compromises that we've been talking about so far, obviously the advertisement falls under some type of regulation as well. Now, why do we need to be regulated in terms of advertisement? First, because people need to know who we are. That's the first thing. So you know very well that if you advertise anything, you must include, if you're the broker, you must include that you are the broker. You must include still your brokerage name. Even though you're the broker for the company, you need to include the company name, right? Followed by any realtor, or anything that defines you, right? As a salesperson, same thing. We must include our full name as it is in the, first and last name as it is on the license, right? But we also must keep the name of the employing broker. Now, the name of the employing broker is the brokerage name. So it's the business name, not the John Smith. It's John Smith Realty, right? Whatever it is. You guys understand? So all your advertisement, this is the first two, are intended to let the public know who they're dealing with. Like, who are you? That's the first key in advertisement. Because the other ones we're going to talk about, follow these two. If I don't know who you are, then how can I sue you? Or having a web page with false advertisement, for instance. I need to know who you are so I can sue you. So even your web page must include the broker's name. So every scene, guys, let me know if you ever seen this. People that have Facebook pages or web pages that say, hey, I sell New Jersey. Right? Wait a minute, don't raise your hand yet. But it says, I sell New Jersey, and it doesn't say the brokerage name. Have you seen those? Because they're out there. All right, so you raise your hand. Okay, great. So they're out there. There's salespeople that fail to realize you are not you. You are your broker. You understand? Everything you do is on behalf of your broker. If I see an ad that says, I sell New Jersey, but then there's no, as an example, but then there's no brokerage name, I could sue you right away because I don't know who you are. You're doing false advertisement because you don't, your brokerage does. Understand? Okay, all our actions are on behalf of the broker, so you must include, even on your web page, on your social media advertisement, whatever it might be, you must include the brokerage information. All right. Ads must designate the geographic area or municipality where the property is located. So this means you cannot advertise just the property just whatever way you want. You also have to stipulate where the property is located. So for instance, I'm in Newark, okay? So Newark right here. And then these are the surrounding towns. I have Elizabeth, Irvington, Belleville, Harrison, and Jersey City. Let me ask you something, guys. If I say that I have a house for sale in the vicinity of Elizabeth, right? Where's the house located? If I said it's in the vicinity, or if it's near Elizabeth, where's the house located? Is it located in Newark, or is it located in Irvington? Maybe it's located in Hillside. Maybe it's located in Linden. Do you understand what I'm saying? So every advertisement you do must include the actual municipal location. So if the property is in Newark, for instance, if the property is in Newark and I say it's in the vicinity of Elizabeth, now I know that the property is somewhere here. Right? Now I know that the property is somewhere around that border. Right? Instead of being in the other side of Elizabeth, I know it, the other side of Elizabeth, I know it's exactly in Newark, close to Elizabeth. Right? If I told you that the property is in the vicinity of Belleville, but it's located in Newark, again, now it would be right here, this little stretch. Do you guys understand? We need to know where the property is located so your advertising cannot be deceiving, right? A lot of people use neighboring towns to increase the value of their, or to attract more people, increasing the value of the property, right? I need to know exactly where it is. It's in Newark. It's close to Elizabeth, but still in Newark. Which area of Newark? And then people can determine based on that. It could have been, when I said vicinity of Elizabeth, it could have been any other town. It could have been Hillside, right? Could have been Union, Linden, right? So you're not telling me exactly where the property is located. So I could have assumed when he said vicinity of Elizabeth, I could have assumed the property was anywhere here, right? Doesn't say anything specifically. So again, the municipal location must always be included. Your ads must always say where the property is located. Do I need to include the full address? No. But I must include municipal location. Where is it? Ads that indicate amounts of payments or the availability of financing must also indicate the words, right? And approximate or estimated. One of these must be stated there. You got it? So every ad that promises financing or indicates payments or anything like that, we talked about this in chapter 17 under financing, must include the words to a qualified buyer. You guys remember lottery, contest, or games? Right? Like I said, anything that's offered for free must be truly free, never contingent upon the consumer entering into a sale, listing, or other contract. Also, we cannot offer free appraisals. If you guys remember from chapter 16, what we do is free valuations, while appraisers do appraisals for a fee. With that being said, what is the difference between free and fee? What is the difference between free and fee? Can you tell me? Well trained. Okay, cool. And the difference is the R. Very good. So, why is this important? Again, because as we're reading the question, if you read too fast, you do not notice the R as we're reading, right? Then you're going to assume a totally different question is being asked. So make sure you slow down when you read the questions. Very, very important. All right, you guys already know that in New Jersey, you can advertise the commissions as being a standard 6%. You guys already know this, right? Commission is a standard 6% in New Jersey, correct? Thumbs up, thumbs down. No, there's no 6% commission as a standard. They are negotiable. Negotiable. Okay. Always got to try to trick somebody, you know? Because that's what the exam will do. All right, next. Says right here, interstate property sales. What does interstate mean? It means out of state, okay? So, sorry. Interstate means out of state properties. properties that are not located in New Jersey but being advertised to New Jersey residents. So interstate property sales is properties out of New Jersey being advertised to New Jersey residents. Okay. Now, the New Jersey Real Estate Sales Full Disclosure Act regulates the sale of certain types of out-of-state properties when the sale occurs in New Jersey. Properties involved include subdivided land, condominiums, common interest ownership, and properties with homeowner association that are sold through a common advertising plan in New Jersey. Now, properties exempt from the regulation under the Act include subdivisions with less than 100 lots, commercial properties, individual listings, and community rental units. There are not timeshares. So if there's only a small number of properties being sold that do not require registration, the Commission is allowed to exempt these properties from the Act. So what is the Act? This Act requires that any property that's being advertised to New Jersey residents, right, any out-of-state property, must be filed, registered with the Bureau of Subdivided Land Sales Control. So there must be a public offering statement that says, hey, residents of New Jersey, here in the Poconos, we have this development. Are you interested? Right? So any out-of-state properties must be registered with the Bureau of Subdivided Land Sales Control and must include a minimum of 7-day cancellation period. So can you put an offer on a contract and then walk out of it? Yes. With at least a minimum of 7 days must be allowed for you to walk away from a out-of-state property contract. Okay. Another requirement right here at the bottom, and again, a lot of this stuff is similar to other chapters. Another requirement right here at the bottom, calendar. Another requirement right here at the bottom is advertising out-of-state properties in New Jersey in any language other than English, requires that all related forms and documents be provided to the prospective buyer in the same language using the advertisement. So what I'm saying is very simple. I'm Portuguese, so I'm going to advertise to Portuguese residents, let's say. If I advertise to Portuguese residents in Portuguese, then all the subsequent forms must continue in that same language. Can I say do advertisement in Portuguese and then present something in English? No. I must continue in the same language. There's no requirement for me to present in Portuguese and English. If I started in Portuguese, I must continue in Portuguese. If I start in Spanish, I must continue in Spanish. If I start in French, I must continue in French. If I start in German, I continue in German. You guys understand? So the language must continue the same as it was in the advertisement. This is a recent New Jersey requirement. All right, next. And this is pretty much to finalize. We already talked about all these right here. Everybody knows what the National Association of Realtors is, right? Boom. New Jersey Realtors is the state branch of NAR. That's it. Okay. I'm not going to disqualify these two, but for state exam, I mean, these last three, for state exam, they really do not matter for state exam. But I'm going to go over this briefly. So National Association of Realtors was founded in 1908. They created the Code of Ethics in 1913. We already talked about ethics, so I'm just going right through. Through NAR, you get different trainings, which I've mentioned before to you guys, including SFR, right? But you get different trainings. You get ABR, Accredited Advisor Representative, Accredited Land Consultant, CCIM for Commercial Properties, CIPS for International Property Specialist, CPM for Certified Property Manager, and so on. So different trainings depending on the field that you're going to specialize in. Do we have to do all these? No. What I highly recommend is that you focus on one. If you're going to be a residential specialist, then do everything That's residential. If you're going to do a commercial specialist, then do everything that's commercial. Do you understand? Don't try to do all the trainings, because every year they might have a renewal, or every 2 years as well. And then if you don't use it, what's the point, right? New Jersey Realtors, like I said, is the state branch of NAR, and they provide these trainings for you. CREW is the Commercial Real Estate Women Inc., New Jersey. So CREW, it's a not-for-profit that was founded in 1982 to promote communication interaction between experienced commercial real estate professionals in New Jersey. And then the last one was, New Jersey Real Estate Social Network, NJRESN. This was created by somebody that I know. I was actually one of the first people to show up to this event in 2008. One of the first members of this event that happens every month. It was created by, if you guys ever heard of the fortune builders, right? If you ever heard of fortune builders, they're all over the radio always, like Than Merrill, the founder of Fortune Builders, whatever. So John Steingraber, which is the guy that founded NJRESN, is the original fortune builder in New Jersey. So he's the guy that went to fortune builders in California, and then came back and founded this for New Jersey residents. The only advantage, I mean, the biggest advantage that you have by participating in these type of networks, right, that we're talking about here, the only advantage is because they bring agents, investors, and industry servicers together for discussions, education, social gatherings, but mainly networking. So you get to learn, right? It's called dining and learning, because you have dinner there and you learn from all these people. You got like 200 people showing up at every event, right? Not now, obviously, but these are great events to participate, right? It doesn't matter which agency you're going to be working at, right? Because John also opened up his own agency with his wife. But the purpose of the events is not for recruiting, it is for learning, it's for gathering, it's for networking, right? And that, at least, he has it very clearly separated. So if you guys ever participate in them, they're great for knowledge. They're great for you. Oh, I don't have an appraiser, go there. I don't have an attorney, go there. I don't have a lender, go there. Do you see what I'm saying? Or the first step should be to come to me, because I can tell you a bunch of people. Just yesterday, I shared an appraiser with somebody from a different agency. So it doesn't matter where you guys go, whether you go here or you go to any other. There's a lot of these networks, right? But do participate in networks, share your experiences, get to learn, get to know investors there, right? You might click with an investor that's there, and that becomes your source of income forever. All right? So definitely participate in as many as you can. All right, guys? Do you have any questions? Anything you'd like to address? Nina, of course. What's the fortune thing? It's an investment group, and they go around the United States teaching people how to invest. It's fortune builders. I like their system. I just don't like their marketing ways and their student selection ways. But their system is great. Unfortunately, most of these trainings that are provided across the United States, not just fortune builders, but almost all of them, they focus more on getting 10,000 people there, and then if 1,000 people purchase the basic course, and then if 100 people purchase the mentorship, they're happy, without seeing if you qualify for that or not. So some people dumped, and I can tell you that from some of my students over the past 4 or 5 years just teaching this course, forget everything else, but just from this course. Students of mine that paid $20,000, $30,000 to get the mentorship, but then they didn't, that was all the money they had, but then or credit cards, right? But then didn't do anything with it. So it doesn't matter where you're going to put your money into. What matters is what you're going to do with it. And if you don't, and it's a company that doesn't do accountability or follow up or anything, it's just a waste of money. Right? So again, Fortune Builders, great program. I believe they have a great program. I've seen it. Been part of not the Fortune Builders directly, but I've been part of a few trainings where they were brought up, and I do believe in it. I just, again, my biggest issue is if I don't get to sit down with you and know what your goals are, but I'm already charging you up front for it, that's the only thing that draws back, my only drawback regarding them or any other type of training. Because they lure you in, like everything. Like I have something similar as well. Lure you in with here's a free, but then here's the first upgrade. Oh, by the way, if you want this, here's a little bit more. And if you really want this, there's a little bit more. Got it. But I would never do it, right? I'll give you the top line training, knowing that you can afford the training. Otherwise, look, maybe this is not for you right now. You see what I'm saying? Let's start with something that's easier, something that will take you to that next step first, rather than just, oh, give me all your money. You know, that for me doesn't work. And it's not against Fortune Builders, it's against almost all training events out there. So again, out of all of those, I think Fortune Builders is the one that has the one of the best programs out there, right? Just a qualification thing. Anyway, with that being said, any other questions besides that? I know. Question that everybody's. Love it. Just paying attention. If we go to the network event thing, can we deduct for that? Where's Elda? Elda, can you answer that one, please? Can we deduct network events? Can we deduct network learning events, participation events as an independent? The answer is, thank you, yes. Yes, you can. Because it's a training, it's an education event. And if you participate in the membership of it as well, membership costs could also be deducted if it's for your business. There you go. Any other question? All right, no questions? Great. Going once, going twice, and all right. Nina didn't ask her question. Great. So I'll see you guys. Nope, don't disappear. No, that's it. I'm not answering anything else. So I'll see you guys. By the way, tonight we start a new class, chapter 1, 2, and 3 tonight. So if you guys want to review this week before the exam, totally up to you. If you want to jump on tonight's class, you can. 1, 2, and 3, then it's 4 and 5 and so on tomorrow. Can you repeat all that? My stream froze. God. Nina, what am I going to do with you? I said yes, you can deduct. You can deduct the cost of going to the event, and if you become a member of a particular association, because it's for education purposes or for conduct of business, you might be able to deduct. Elda, okay. Sorry, just waiting on the question. Fallon, yes. It's a good thing to be independent. Yep. Being independent is great. Every single, like I said, every single training, every single event, if it's course of business, to be deducted. Right? So, by the way, that's why I always tell people, even if you're an employee, start a side hustle. Because a side hustle could help you reduce your taxable income. Always start something. Right? Um, is it good to put a bunch of deductions? Well, most of the times it is good for the tax burden, whether you have to pay or not. But then if you want to qualify for financing, that's the drawback. So being independent is great. Just remember, what is your ultimate goal? What are you deducting for, right? And how will that affect you in the future? So remember those things. All right, guys. So with that being said, we are done with the class. I'll see you tonight if you join us. If not, tomorrow at 10 a.m. Have a great rest of your day.